All right. Good morning, traders, and welcome to this live intraday strategy webinar. Today is Tuesday, April 12th. Michael Boutros with you on the horn. Good morning to everyone in the room. We just got release of U.S. core inflation rate, guys, coming in at 6.5, slightly softer than the 6.6 we expected. Headline inflation hitting 8.5, beating the 8.4 expectation, guys. That takes us to the highest level since 1981. In US inflation. Certainly, everyone's been waiting for this print. It's kind of been the highlight for the week. You still do have some further event risk on tap with BOC and the ECB on tap, but certainly one of the bigger plays this week. We'll go over all the price action in today's session. On the menu, we'll hit DXY, see what that's doing. Aussie dollar at support, dollar CAD near resistance. The NDX, I don't see, there he is, Ty in the room. I got that covered for you. Kiwi dollar, gold, SPX, the Dow Jones, dollar yen on the breakout, and sterling kind of sitting here near support. So we'll take a look at those. Any other questions or trade setups, as always, feel free to throw them on the message board at any time. Let me just get another card here. Ty wants to take a look at SP, got you, NASDAQ, got you, gold, silver, crude, the 10-year, corn, soybeans, and wheat. I haven't had any new charts, or I haven't actually put together any charts on those soft commodities, Ty, but if we have time, we'll take a look. So let's jump right in. This is what the DXY looked like on our last update. This was published back on the 6th, and we were really just focusing on what kind of reaction we get here near resistance. It's the 786 retracement of the decline off the 2020 high. That's 100.04. We're there right now. Okay, from a weekly trading standpoint, the focus is what kind of inflection we get off of this confluent zone. If we close below this, again, you're risking that exhaustion print, okay, the pullback within the broader confines of the uptrend. If we close above, continuation here leaves us into like 101 and change. So there's not much in the room of the upside here. There's no hurdles beyond 100 here if we get through this 100 level on a weekly close basis. Take a look at the week on the daily as it looked back on the 6th. Again, we had a 618 extension here that we were looking at. There's the 786. Not much to write home about here. Okay, we're just trading there right now. We're stuck in this little zone. One thing I do want to highlight is that this move, okay, if today ends up being an update, which it's not, it looks like we're trading heavy. Just a few minutes ago ahead of this release, we were trading still on an update, would be the 9th consecutive update in a row for the dollar index. Guys, we haven't seen anything like that save back here in 2016. And even in that instance, it wasn't even at the high, right? It was a little near-term correction before making a new high. Privy to that, you're looking at the 2013 rally, which was the high. Okay, that was 10 days up. And then here you had a big old ripper back in 2012. That was like 14 days in a row. Again, right before we made a new high. So just a simple study shows that we're on extremes on a bit as far as consecutive up days in a row. We're at resistance as it pertains to just basic lateral technicals. And it's a good area to soften your approach. If you're long dollar, we're still constructive on the dollar, guys. It's still a supremely strong uptrend, but every uptrend sees its resistance. And within the confines of that uptrend, we are running into some trouble here. Here's what the scalp looked like again back on the 6th. Really tight channel. I told you guys I'm not really a big fan of these really tight channels to the upside, but this is a prime example of why. We broke that to the downside, but we haven't gotten any play. We're kind of just treating it as resistance. Here's what it looks like now. Okay, this is the 2-hour chart. I had the 4-hour chart on there last week. But same thing, right? We broke it, but didn't really get much play to the downside. And here we are pressing up again on building divergence on the 2-hour chart. So the exhaustion trade is there, but we just haven't gotten the signal to kind of start to press more of an assertive dollar short positioning yet. So something we're taking a look at for sure over the next couple of days. Next major event risk is going to be the ECB and the BOC as it pertains to the dollar, but those core inflation numbers, 6.5 on core inflation, 8.5. It's not going to really move the needle for the dollar. We talked about this yesterday. The market expectations are starting to go through the roof with regards to 50 basis point increases instead of 25. Obviously, we're getting QT, right? Quantitative tightening, which is them offloading the balance sheet. There's a lot of things at play here. But for the dollar, the interest rate expectations as it pertains to higher rates, I think that trade is exhausted. Everyone's priced in further rates. We're already at, geez, I don't know, like 100 basis points up for the year. It's the expectations are there. So we need another catalyst, okay, to push and really charge another break of resistance at these levels. Questions on the DXY? Now, I didn't write any updates for you guys on Euro, honestly, because it's been boring as hell. Here's what Euro dollar looks like real quick. That'll be number 2. It's 1 and 2 is Euro. We're at support, right? We talked about this yesterday in the webinar. If you guys were on Daily FX, I put out a piece. This is the chart that I looked at. It's 108.31. That's critical support. We're trading right below the low close for the year. Now we're at 108.75, but it's just a range, a broader range on the weekly chart right above support at the yearly lows. This is downtrend support. I know looks like there's a lot of lines on here, guys, but there's just 2 channels I'm considering. These 2, okay, in red, and these 2 in blue, okay? The red one's been compromised on the upside here, but it still has some momentum. Both of those converge where we rebounded earlier last month, and both of those converge on the next level down, which is 106.56, 106.97, this key zone. So Euro's sitting at support. There's really nothing super exciting here. Here's what the daily chart looks like. We showed you that little near-term uptrend last week. That broke to the downside, didn't give us much play. We're sitting here at the median line right above the yearly lows. So it's a boring trade. Here's the intraday. All things held constant on this one, guys. It's a simple, let's just get rid of this 786. It's a simple weekly opening range right above critical support. So the focus is on a break of this range right here. If we break the downside, there's nothing until like 107.26 to the initial target, and then like I said, 106.35 and change. But you know, you're at the yearly low. You're at the yearly low. So not much to write home about there on Euro. I'll skip through that one pretty quick. Next up on tap is Aussie dollar. Okay, and here's what Aussie looked like last night. So we're at support, okay? The level we had highlighted last week at the exhaustion, like could be an exhaustion trade on this spike and failure above 75.98. That's exactly what it was. We broke right above that. It exhausted, looking for a pullback. Once we broke the median line, you're looking for uptrend support. Very, very simple setup. Here's Aussie first on the weekly charts. The reason we started to look for exhaustion was because of that big old outside candle that we got last week, all right? Took out that 76.10 level, which is the 618 of the decline from last year's high. Big old pullback. So we were looking for that to settle right here. And I talked to you guys about this level at length yesterday. It's a critical convergence zone, okay? It's the low week close from that May 2017 drop. Beautiful pivot in price, okay? It's the 38.2 of this year's range. It's the 52-week moving average. All of them are lined up right here near 73.77, 73.96, right below the 74 handle. So we're looking for a reaction there. That's the Aussie on the weekly charts. Here's what it looks like on the daily charts, right? Pitchfork we've been following just off of this year's low. 1, 2, 3 has the lower parallel right there, the 38.2, and again, the September 2020 high. Near-term pivot, also very nice level in trade. So we started to warn, heading into that level yesterday, this is a good area to find support. Now, all things held constant, this is a very clean weekly opening range, which means if we were to break through the weekly open, 74.50, if we were to break through the weekly range highs, you're looking for that stretch towards last Friday's high and beyond. Here's what it looks like on the intraday chart. So we got a little kick here from the inflation data, looking for that rebound to follow through. We haven't taken out the weekly high yet, but we have taken out the weekly open, again, 74.50. Look for some continuation here, okay? I'm looking for a stretch towards 74.92. That's, for me, as it were, the breakout for the resumption of the broader uptrend, right? A weekly opening range breakout, 74.65 takes you higher. A breach above 75, essentially 74.94, puts you on the resumptive path within the broader uptrend. All right, so no change to any of those levels from Aussie dollar. Questions? Got Westpac Consumer Confidence Index later today out of Australia. Not really a major market mover, guys, but with everything that's going on, the sentiment read has been sort of central focus for a lot of these trades. One other thing for Australia, heading into tomorrow night, we do have Aussie employment numbers. We're looking for a gain of somewhere in the range of 40,000, with unemployment seen down ticking from 4 to 3.9%. Starting to play a little catch up here. That's Aussie data into the latter end of this week. Any questions on Aussie? Great trade, working out good. Okay, that's number 4. Number 5, number 4 is dollar CAD. So we got the BOC on tap. Here's what dollar CAD looked like yesterday. Another beautiful trade in that we were just saying, red alert, we're heading into resistance. You can see it right here on the right. It's already starting to play out. I'm not positioned in this one, unfortunately. I wish I were. The entry was probably around that print that we just got against the high. So you're looking for initial levels of support right here, 125.93, 125.86. If we break the weekly open, which corresponds with the weekly opening range lows, that's going to necessitate a break below 125.65. If you get that, you're looking for a drop towards those lower parallels. Guys, this whole pullback is still within the confines of the ascent from downtrend support. Here's the recovery, the embedded ascending formation, finding resistance here today, looking for a pullback towards the median line. BOC is on tap tomorrow. Take a quick backwards look. Here's what dollar CAD looks like on the weekly charts. Certainly the level that we were looking for support was outstanding, 24.53, the objective yearly range lows, uptrend support. Once the recovery here rallied, there's the 25% parallel. So maybe a little bit of a pullback here. But what's important is to understand is that it's still within the confines of the broader uptrend, right? Resistance, the yearly open, that's bearish invalidation still. Nothing's changed, 27.10. We need to breach above that and close a daily close above that to put the broader uptrend back in focus. Till we do, this is what we're looking at. And that's your bearish inval. All right. Questions on dollar CAD, another superb setup from last night's update. Last from last night, or the last one from last night, was NDX. Here's what the NDX looks like now. Watch the open of the markets, guys. I am looking for this thing to find some support pretty close by. I'm looking at 13,878, 13,948. Some inflection here. Okay, we want to see some inflection here. If this breaks on the downside, there's really nothing to stop this from 13,180 again. Okay, there's no slope, there's no major pivot points. I mean, you may get a drifter there near that low that we made from the initial January drop, but you know, it's pretty technically damning. Okay, if we break and push through 13,878, 13,948. So watch that right into the open of the trade. Again, I'm going backwards on this, guy. Sorry about that. Here's what the NDX looks like on the weekly charts. Okay, talked about that break and the pivot above that slope. It's not as clean as SPX, and we'll go over those levels in a moment. This thing is just picture perfect, but the NDX is still flirting, right? If this break is legit, first level that comes into focus right there at 13,000. It's the February 2020 high, 13,879, kind of right in the same range here, 13,948, 13,878. So looking for an inflection there here today. Resistance at 14,300. Bearish inval right at the 2022 low week close. It's gonna be 14,420. I'm sorry, that's not the appropriate low week close at this point. I don't think so, is it? Oh, it is 14,420. Yeah, wow, that massive outside week. Yep, levels look good. Levels look good. Here's the side by side. Daily chart's a little more open here, but you get the picture. All right, that was last night's update. Any questions on anything so far? Marcin, I see your list of exotics there. Again, I'll see if I have some time to go through those. But I can tell you right off the bat, I don't have anything off my hand right now. Okay, last night's update, or the previous night's update, New Zealand dollar. So Kiwi dollar found itself in a very similar scenario that we're looking at with Aussie, in that we're now approaching support. Remember, Kiwi on the weekly turned from pretty major resistance. We were eyeing that level for quite some time. It's the 2019 high, 69.41 to 69.96, which is just the basic 50 of the drop. You had the 52-week moving average in there for the last 4 weeks. You saw a big outside candle again last week, which kind of put in that near-term high. The pullback, we were looking for uptrend support. You don't see it here on the weekly chart, but I just want to show you where we are in trend. Take a look at the New Zealand dollar on the daily chart, and it looks like this, okay? Today, if we were to close at these levels, again, a beautiful play, guys. I hope some of you caught this. If we were to close at these levels, it would be an outside reversal off of uptrend support. That'd be a near-term bullish signal. Nothing means anything until the daily close, obviously, but I'm just letting you know ahead of time the formation that we're putting in right now. And we had highlighted support in that update from earlier in the week. Here's what the scalp looked like. Again, the daily chart, right? Looking for that pullback to find a settle here. Got a little deeper than that 38.2, but certainly the downside, the wick, catching upslope support here on the daily, catching downslope support here on the intraday. So there's that 38.2, kind of bashed through it last week, but then we closed above. So I wanted to see how we're going to open the week. We opened the week with another test of the lower parallel. Here's an objective breach of what could be interpreted as the weekly opening range. You're looking for a stretch towards 68.86, 68.90, your first level of resistance. Again, the 38.2, the entire advance off the lows from, or this is the decline off of the 2021 high. And then you have the January objective high, 68.90. Now, an interesting tidbit here, I added this morning before this break, but I didn't want to put it there to cloud the chart. If you just take a basic retracement, the 618 of this drop comes in at 69.46. The longer dated 618 of the drop comes in, I'm sorry, at 69.54 right here. So I've since removed this retracement, but you see the picture, you get the picture. Coming off resistance, this is uptrend support, looking for that recovery. The first thing you got to look for is a break of the median line if you're going to get a tag at 6.18. So right now the focus is on 68.80, 68.90. Look for inflection there if we get it. It's the dollar pullback, guys. It's the dollar pullback on the back of this employment print. So don't go chasing this right now if you're not already in it. Okay, Marcin, cheers, mate. I appreciate that. So that's New Zealand dollar, weekly opening range break. It looks like to the upside today. Next up on tap, that's number 6. Number 7, here's gold. All right, so finally getting some play here in gold. I'm going to take this from the top down. Here's the weekly chart looks like to start things off. We've talked about this for quite some time, okay? The gold trade on the weekly chart has been in a critical range right above a major lateral zone of support. 1903, 1920, those are the range highs and the close highs from last year. Breakthrough has been support for the last 5 weeks, and we've been crunching, looking for a near-term breakout to give us some guidance, right? Weekly resistance at 1988, that's just the objective high week close for the year. Key level on the weekly chart we'll be looking for if we get there. But looking at this from the weekly, you know, you're still kind of like, all right, we're in the uptrend. We came off of uptrend resistance. You know, I wouldn't want to get too excited just yet. However, here's the daily chart. And this is where I have some problem with the immediate rally. Here's that key level, 1950, 1959. We've talked about this, guys, on the way up, on the breakout, on the breakdown. It was resistance last week. It was resistance yesterday. You saw that we probed into the median line and then closed back below or within the midst of that 1950, 1959 level. Okay, key zone in price. So what is this here today? Should we be on board here looking for the breakout to finally stretch towards 1991? Or is this just another test of the median line before a larger setback? That's my issue with gold. Pistol to my head, I would say look for a reaction here today, and I want to see a close above the median line to get the conviction for hold longer. If we don't, it could be very well be another exhaustion trade. So that's why today for me, gold is critical. I'll be putting a piece out on daily effects later today. I believe the post time is 11 o'clock, but here's what the chart will look like. Okay, here's the 2-hour chart. Here's your weekly open, guys. You set a weekly opening range low at 1940. You set a weekly opening range high at 1970. We're still there. So if we just take a completely objective approach, forget Mike Boutros or Jamie or anyone that we're looking at, we just look at price. The weekly opening range is set right below, essentially, right, that late March high. If we breach, the top side's looking for the median line of this slope, which currently comes in near 1980. And then again, 1991 and 2000 are going to be sort of your bigger levels on the upside. Constructive above 1940. Okay, if we break the weekly opening range low, wash your hands of this, you could see a washout towards 1890s again. That's how important this breakout is. And again, you remember what we were just looking at on the weekly chart? We were sitting at this support for how many weeks? Look at it. You got a consolidation, lower highs, lower highs, lower highs. Breakout, should be looking for that stretch, at least past the highs we made back in March. So look for this today. We need some follow through. We need to see a move through the median line to continue favoring the upside. On the upside, 1991 is your first lateral level. Number 7, gold. Any questions on bullion prices here heading into the open? All right, number 8, here's SPX. SPX, we are just again right ahead of the open. Big rebound here, but not too surprising where it's coming off of. Here's SPX first on the weekly charts, and here's our last update on the S&P 500 that we published back on the 7th. So before we get into the scalp, here's the weekly charts. We saw a beautiful, massive outside reversal off of uptrend support a couple weeks back. It took us into 2 initial targets, the first 45.47, the second missed by just a couple of points. The high week reversal close, which is 46.77, that's key resistance, right? So on a closed basis, we ran into that 618 and pulled back, okay? The 52-week moving average could be offering some support here. So, you know, wouldn't be too surprised if we get some play, get down deeper. Here's the daily chart. If this break of uptrend support is legit, the rally should fail ahead of former slope support turned resistance. That puts you basically at yesterday's open, basically at 44.87, 44.90. So it's a tricky trade. It's only Tuesday. I wouldn't necessarily want to harp on this too hard, but here's what it looks like on the intraday. And here's the trade looked like again last week, guys. You can't make this thing up, right? That 618 ended up holding, and then we broke lower right into that zone. And here's the break and follow through and pull back. Is that a false break of support? That's a pretty major lateral level. We've been watching it. It suggests that you could get a little bit of a more recovery here. So I wanted to update this chart with you in live time, right? These are all the same levels. We're going to take that retracement down to the new low, and it puts the 38.2 right here at former slope resistance, former slope support turned resistance. So maybe 44.85. This would need to hold if we're heading lower, okay? If we rally through this on the way up, let me add the 618 there. If we rally through this on the way up, there's room. There's room for a larger recovery. 45.44 would be your last zone. This is bearish invalidation. If we break through this, you're looking for the resumptive move for the broader breakout that we saw back last month, right? But right now, false break of downtrend support, looking for inflection around 44.85. We get that break, that's your next level up. If we falter right here, you're looking for the resumptive trade. 4,300, still kind of the region where I think you might find a little bit more of a meaningful bounce, a more meaningful move for the SPX. All right. Questions on the S&P 500? NDX, SPX, got through both those. Okay, last is from the equity side. Here's what the Dow Jones looks like. Looking for this one to play a little catch up. It's not the cleanest level. I haven't really been I haven't been involved in this one, but I did show it to you back here on the 7th, and I wanted just to walk you through where we came from. You know, the rally off support was brilliant. The hold off resistance was brilliant, but we haven't gotten much pushback. We haven't gotten much follow through either way. I do think you play catch up here with a pullback towards like 33,700s would be a nice area of support to look for, at least maybe some inflection. But certainly, you know, we're still below the 52-week moving average. We're still below that 618 retracement. We're still below the median line for all intents and purposes. Looking for short-term pullback there towards uptrend support. Here's what it looks like on the daily chart. Again, you know, there's not really much to describe as far as price action. This is what it looked like on the 7th, guys. Okay, so nearly a week later, here's what it looks like now. No change, no change. 38.2 retracement is still initial support. I'd love to see a stretch down at 33,450, 33,700, that key zone, which is also coming in along the upslope from the low. That's kind of what I'm looking at for the Dow. Okay, that's what I'm looking at for the Dow. Ty, here's the full screen on the 2-hour chart. All right, brother. And here's the full screen on the daily. It's an ugly chart, no doubt about it. You got a lot more descriptive price action of what you're seeing in the NDX, and specifically S&P still have the cleanest, but there's the all-around suite for you. All right, that is number 9. Number 10 is two more FX pairs, dollar yen and sterling. Listen, for the dollar yen breakout, if you're really aggressive and you've got FOMO, fear of missing out, and you really want to get involved here, you know, you have your own perspective. From a trading standpoint, we need to maintain discipline. And a trade like this is the quintessential trade that retail traders will get completely screwed on. Whether they're trying to chase the upside or whether they're trying to get cute and short it, this is where people get sliced and diced, guys. Okay, I always give you warnings on dollar yen. There's a reason I call this the abomination over the last 10 years, 15 years. If you guys have been with us on Daily FX and here on SB, because of these very moves. Okay, so I just want to leave this chart kind of like in the realm here, something to keep a note of. It's the same chart I've been highlighting here since the 5th. So this is over a week and a half here. And we've just been eyeing that parallel slope in red, okay, which is just a parallel of the same dominant upslope we've been in for the last 2 years. And it's also highlighting that critical region of resistance at 125.28, 125.85, and that's still where we're peaking, okay? If this breaks, guys, and I do think it will at some point, there's nothing ahead of like 129. I'll show you in a moment, right? There's a lot of room to the upside, but we're at uptrend resistance. The 52-week moving average, Ty, is way down here. It's 113. All right, we're far, far, far off. So I can't get excited. I can't get excited about wanting to buy dollar yen at multi-years highs, running into resistance from the 2015 high. It's not something I want to do. Do I want to try to short it? I mean, it might be a decent pullback position, but again, even if you take that stance, you're taking a quarter of what you usually take as far as positioning, and you have to really be meticulous and cherry pick those entries because it's a breakaway trade. Here's what it looks like on the daily chart. All right. So a lot of people look at this and say, oh, well, there's divergence into the highs. True, but that doesn't mean it has to turn. That divergence can last for a week, a month, a year. There's nothing to stop it, okay? So I'm not gonna look at divergence as being the reason I would want to fade this. Initial move here looks interesting in that 125.57, the 2015 high day close did hold yesterday, and it looks like we've tried to make another attempt today and a pullback. So you're seeing the initial throes of what could be a near-term exhaustion trade. Okay, there's your monthly open. Get that even deeper. Here's the intraday trade I was showing you, and here are the intraday levels from last week. Nothing has changed. We broke through this key zone. We tested this key zone as support. We rallied into the upper parallel, took out the upper parallel, even tested that 2015 high day close, and we're pulling back. Okay, this pivot on the upside, support, pivot on the downside, keeps this dominant slope in focus. Okay, some parallel action there off of swing highs. Looks like it could have caught. At this point, you tack on a quick retracement off the lows. You dump the old retracement. This is not the high day close anymore. The 100% extension could stay. And you look for something like this. Okay. Near-term support, that's your weekly open objective level, not Mike Boutros' opinions, is right there. It's also the 100 off the low and the 38.2 off the low. So that's your key support. Bullish inval would be down here. On the upside, I don't even have anything on the intraday or the daily. You got to go back to the weekly charts and look on the upside for slope, which comes in somewhere, like I said, right ahead of above 129, 29.30s, and then up into 132s. There's really I mean, this is breakout territory. This is breakout territory. Are you a bull on SPX or a bear on the intermediate? So for the intermediate, I'm looking for a near-term low, like right now. Okay, so I told you the SPX, I'm not sure if you just missed this. Looking for this like recovery, maybe a little higher. Right now, into the open of US trade, I'm looking for a reaction at 40.45. If that breaks, maybe another extended move, but ultimately looking for a high off one of these two levels. I do think we make a new low. I do think ultimately we make a new low. Near term though, Ty, you do have that little bit of a recovery, possibly a false break scenario here. Even if it's a break of uptrend support, just to test this as resistance leaves room for a little bit of a move higher near term. All right, does that make sense? And same for dollar yen. So, you know, at this point, still leaves room for a little bit of a pullback. Anything beyond 25.85 is a extraordinary breakout, but near term, I do think you risk some pullback here. All right. Last but not least from my end, guys, is the British pound. Here's the British pound looks like. All I wanted to highlight is that it's a very simple weekly opening range still in play heading deeper into Tuesday trade. You have core inflation data coming out of the UK tomorrow. That's expected to top 6.7%. So talk about this being a global issue at this point. But from the intraday chart, there's really not much to update. Here's what the chart looked like back on the 5th. And it's a near-term range break. We saw that break, but we're still sitting at that 1618 extension, 130.11. That's still been basically support. At the end of the day for sterling, guys, the one thing you want to keep in mind is we're holding the yearly range lows here. This is the daily chart, right? Really strong downtrend. We're sitting at the lows. If you take this back into the weekly chart, again, going backwards, sorry here, but you can see it's a pretty major drop here. You're bearish below 132.70 if this has a downside, but you're getting divergence into that low. Could be a near-term pullback, but that would take some dollar weakness to get the upside, and I think that could be the play, especially if DXY exhausts into the highs here. So I do think sterling may have a little bit of a rebound off support, but we certainly do need to sort of see what the play does here in the near term if we do get this hold. Ty saying we're getting the breakout in gold right now. Yep, we're at resistance now. I wouldn't say it's the breakout just yet, okay? Watch the median line on the near-term charts, 1980s. On the daily charts, the longer one is basically where we are right now. So watch today's close, guys. This is pretty good, but the dollar drop-off will certainly propagate this and continue to pump this higher on the back of that core inflation. You might still see some dollar softening, but ultimately that just means higher rates. So don't get too tied up in the narrative here. All right, so that's everything that I have on my end, guys. Let me see if I can get through some of your questions here. I do have to run shortly, but that's 10 and 11. Number 12, silver for you, Ty. Here's what silver looks like. I'm expecting it to track gold higher. The breakout, as I noted yesterday in the webinar, was delayed, right? The gold breakout manifested itself clearly on that Friday move with that breach higher. Silver kind of took its time, but just broke out into the start of the week. So silver levels haven't changed from the webinar yesterday. Near term, I'm looking for a reaction at 25.40. That's also the, for all intents and purposes, the weekly opening range high, right? Just below it. So again, don't get too carried away until we see that pop. But if you do 618 at 25.80, just higher, I think you get a clear play down to that. I was looking for some upslope on this earlier today. I just want to show you what this looks like. I have no clue if there's any merit to it yet, but I was looking at this slope. And if this slope is legit, then you should be looking at first sort of a slowed rally a little bit over the next couple of hours back towards that 618. Again, that's 25.80. Constructive, basically above the weekly open, the weekly opening range low, which is right here at 24.75. All right, so you can use that slope for now. I wouldn't want to get married to it just yet, you know what I mean, Ty, but it might give you some guidance here on the way up. All right, so that's silver. Crude was another question from you guys. I don't have a beat on this one. I'm looking for a low. It's kind of what I've been saying for the last couple of days. I'm looking for a low. I just don't think that's, I mean, that could have been it yesterday. Ideally, it was a deeper cut towards 91, basically 92 is where we want to see a little bit more of a stretch. You didn't quite get it. At the end of the day, guys, even if this is a basic wave count, 1, 2, 3, if you're looking for that third wave to make a new low, and again, that's just too close for comfort. So I don't want to call this sort of the rebound trade just yet. This would look like on the daily. Here's the intraday. You know, we haven't even broken the weekly opening range high. If we do, maybe a breakout, right, with a break of that slope, but it's messy, Ty. It's messy. I think this one, the ideal scenario for me, again, this is just my humble opinion, is a nasty washout. One more washout, 88 maybe, you know, 92 would be the ideal, but maybe deep into the 618, then you find something like this where it's a strong assertive rally, got those cleared out those weak hands, but that's just my opinion. I mean, I don't have much of a beat on it from this level. Looking for a low would be the ideal scenario. I'm patiently waiting for the washout. Yeah, that's the ideal thing. Nothing's changed. Again, from the fundamental story, nothing's changed. From the energy story, nothing's changed. In fact, things might be getting even tighter, but certainly on a stretch, this is a decent and healthy washout. You want to see that. You know, ideally, you'd love to see sort of a mean propagated drop before you resume, but we'll see. We'll see over the next couple of days. That's number 13. A quick look at yields, Ty, for you. Here's what the yields look like. I do think that the 10-year is going to exhaust a little bit near term. You're already on the onset of what could be interpreted as an outside reversal candle today if we were to close at these levels. But, you know, certainly a strong breakout of uptrend support. I do think there's room on this. And the next upside target is 292. But near term, again, every trade has its exhaustive move. And even if we were to make a basic 236, it takes you back to 240. I'm not necessarily playing this in a trade stance, Ty, but just to put you into perspective of the breadth of the take for that rally in the 10-year. Now, again, if we look at the 10-2, which everyone is looking at for the inversion play, we've seen that we've recovered. This is the daily chart. We've recovered from inversion days ago, and it is sort of making its way up. So was this sort of a precursor and a warning that we could be heading towards near-term recession? I do think recession's on the horizon, maybe not as near-term as everyone thinks, but the recovery here is something you'll hear a lot of people talking about over the next couple of days. Let's see if this has any follow-through. That's a big drop. And again, every subsequent drop we've seen to these, save the pre-COVID move, was a recessionary time period. So something to keep in mind. All right. Okay. Ty, what's the ticker you're looking at for soy and corn real quick? resistance. That's the CFD, yeah. I usually will cover, I usually will look at the CFD's contracts for the analysis because it kind of blends in pretty well. But I'm not sure which one you're looking at with soy. Corn is at resistance. I looked at that like a couple of weeks ago. Soy looks like it recovered that move from late March, but we're still at resistance. These are all coil plays, Ty. You're looking to play inside the coil for the breakout. The com block in general, well, this is taking a different tack from the hard commodities, obviously, but all of those commodities, in my humble opinion, do have an uptrend on them. But again, they're, in a near-term coil, they're near the yearly highs, sort of running into resistance. That's soybean again. Here's corn, right? So trades, I think we need to kind of sit out and wait for the larger breakout move, or again, the washout. Same thing here. Yeah, these are not trades I'd be interested in necessarily tracking. Again, broader focus is higher, but I don't think you have any trade here necessarily to take it from yet. Can you look and do it on Thursday? I'll keep an eye on these, corn, soy, and wheat. I'll keep an eye on them on my watch list, but Ty, there's so much price action and what's actually moving. Part of your job as a trader is to kind of decide what warrants your attention, right? The storylines, the headlines that you'll see crossing the banners and all the financial news publications, a lot of times they're just that. They're just stories, they're just noise. So I understand the interest and I'm all with you. If the technical stance is such where the interest is there, there's an opportunity, I'm all over it. I don't care what the asset is. I don't care if you're trading seashells, right? And it's a widely traded, obviously, sort of a volume trade. But for some of these soft commodities, it's just not there. We are in rare times, Ty, and it's worth tracking. But again, it's only if the technical stance is there. So we have to decide where we give our attention, what warrants our time, right? But I'll keep an eye on these for you. Marcin, I know that you're going to be watching the replay, but you had a question on some of those Swiss crosses or Swiss crosses, CAD Swiss. Okay, obviously you've seen I haven't updated this since 2021, so bear with me 1 second. This is the daily chart. Let's just see where we're at. Okay. Okay, so you're coming to the top end of the range. You're coming to the top end of the range. This could be a near-term, I wouldn't say near-term, what am I saying? This is the daily chart. This is like a yearly trend. Really slight downtrend on the channel there, but you're basically coming off of trend extremes from the upside. Again, guys, know where to focus your attention. Know to focus your attention. If you're looking for a simple trade, Marcin, you're trading on the insides here, sure. Yeah, right now you're testing a break of the monthly opening range lows. If you see a downside move here, look for the pullback. That retracement is actually still in play that we added last year. I wouldn't be mindful of that 236 though. I'd be more inclined. Wow, that's the 38, huh? I'd be more inclined to look at the December advance. And that 38 too is probably right where we are right now. Yeah, okay, just a little bit lower. So if we buckle 73.50 on the downside, I do think you get a larger drop. Again, you're within the confines of the near-term channel. Until you're out of the channel, you're not. Now CAD Swiss, again, if you look at the sort of breakdown of what you're actually trading in here, I'm neutral on Swiss. If anything, I'm a little bearish, but I don't have a strong enough conviction here to try to push a bias on this one. All I can tell you is that you're coming off the upper extremes of this trend. Near-term support 73.53, okay? Forget that 74 level. Just keep an eye on the high day close for the year. All right, so that's CAD Swiss. Aussie Swiss and Kiwi Swiss. Okay. Took out that 786. Took out the 1618. Okay, so you got to break out of that zone back in February of that downtrend that we were following from last year. We've taken out the highs from October, November, which is actually pretty important. But you're seeing some tiredness here. So again, divergence into the high, the momentum barrier turning over. For me, again, Marchin, this is an absolute, clearly well-defined monthly opening range. Here's your monthly opening range low. The high spiked into the 786 retracement and pulled back. If we take a parallel, whenever the slope breaks, guys, like this, and you want to know, do I still stick with this gradient or is it trash? Take a parallel, see what it looks like. Does this parallel give us gradient off of another high? Well, actually it might be. Resistance, 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 possibly. So I'm going to continue to look at this slope, near-term support right at that 38.2, that converges on the 25% parallel in your 68.33. You need to breach above 70.80 to get the next resumptive move towards the 2016 open. That's like 72.85. Ahead of that, I would actually just keep an eye on those highs back here. The high day close is actually here. February 2021 high day close. And again, just the objective swing high. So levels on the upside, I definitely keep an eye on. Boom, boom. All right. Marcin, I hope that offers some guidance here. I don't have a scalp set up for you, but if we did have to put a move on the decline, let's just see what this looks like. Okay, that's actually pretty interesting. Near term. $618 should be right there. Beautiful, beautiful. All right, so near term, here's a little setup for you. Near term, it's bearish while below 70.17. On the downside, if this is going to break the monthly opening range lows, if it's going to even break those range lows from late March, you're basically looking for a move and a dump towards 68.33. That'd be just a simple 38.2. Very, very simple. Obviously, entry from here is not really prudent because you don't have a proper stop, but on this recovery, 70.17 should hold if we're heading lower. All right. This is Aussie Swiss. And you're looking for Kiwi Swiss. It's probably similar setup, New Zealand. Okay, so the same pitchfork we were following from last year, breakout, now testing it as support. Let's redo these levels really quick for you. Boom. Wow, we're at the 38.2 right now. So this one's at support already. However, looking at this, looks like a 1, 2, 3, 4, 5 wave count to the upside, very clear. Dominant upslope trend. 2 equal legs off the high. Woo. We're actually, yeah, this is a decent setup as well. If today's recovery holds, and specifically if you mount an outside day reversal, we close back above the monthly open, this actually might be a decent rebound play. Break of resistance, check of support, and move on your merry way. It's a clear breakout as it looks like it was for a breach of the yearly opening range. Here's your January open, made a low, test the high, here's the breakout. So I do like the dominant move to the upside. It's just today, this week, I would want to see definitely a hold of 63.45 if we are heading over, heading higher. Excuse me. That's an interesting trade, Martian. Both of those, Aussie Swiss and Kiwi Swiss, very interesting. CAD Swiss, not so much. No interest there. Potential last one of Swiss yen. My man, you are looking at some exotics here. Let's see what's going on. Blast off, no surprise there. It's a yen cross. Slope. Okay, so we saw that clear breakout back in March, and it's been no turn, no looking back ever since. This retracement null and void, but let's just go and throw it at the high right now, just for giggles. Yeah, I mean, what do you want to do with this, Marchand? There's nothing to do here, my man. Unless you want to play it super cute and you think you can call the high here, but I'm not chasing this to the upside. I don't have slope here, maybe a little bit higher before you even run out of that. You know, way deep into overbought. This is a breakaway trade. I don't even bother looking at these. This is, I think you're right. Maybe in the future, maybe potential, if it runs and kind of gets you a little bit more of an exhaustive pump, and then you start to get some downtrend or down slope in play. But this is just a wait and see for exhaustion. All right, you got your money's worth today, guys. I went through so many setups. Keep the basics on the majors that we've been talking about over the last couple of hours, last couple of days. Looking for some of these reversals, some of these rebounds to really gather pace. Remember the Aussie rebound, the Kiwi rebound, both of those coming off near-term support areas. As far as dollar CAD, you still have the BOC on tap. That just came off resistance. We did hit the support level, so watch for a pivot here today. And next thing on tap, like I said, will be the BOC and the ECB, which could, again, offer a nice little kick for some volatility here heading to the close of the week. Sending you some big picture gold charts. Ty, always willing and happy to look at charts. That's our language. So open to all commentary as always. Guys, best of luck trading. Keep nimble here. Just getting into the further throes of the monthly opening ranges here, but some of these trades are pretty extended. We'll see if we can't get some follow through on specifically some of those com block currencies. Wrap it up here. Pick it up on Thursday morning. Good luck trading this week, guys. Cheers.